Every time a skyscraper rises in Shanghai or a new bridge is built in Beijing, there's a good chance it was made possible by rocks dug up from the red earth of Western Australia. When a Chinese steel mill churns out beams and sheets, Australian iron ore is likely in the mix. As electric vehicles roll off assembly lines in China, they carry batteries filled with Australian lithium. And when lights glow in Chinese cities, Australian coal and gas often help generate that electricity. In short, Australia has been fueling China's industrial boom over the past 2 decades. Don't believe it? Here's a graph on the Australian exports to China by year. Here, you can see that Australia's exports to China have grown massively. Back in 2000, Australian exports amounted to just $3.47 billion, but by 2023, it reached over $156 billion. This figure is massive, and Australia is one of China's biggest import destinations. Here's another graph on the largest import markets of China. Here you can see that Australia is the 4th largest destination for Chinese imports. But being the 4th largest is not the convincing story here. It's in what China buys from Australia that matters most. For instance, if we graph out the largest imports by category from South Korea, we get to see that they mostly buy electrical equipment, machineries, and other chemicals. If we compare this to their Australian imports, however, we get to see that a lot of their imports from Australia are mostly ores, fuels, and other raw resources. In other words, China doesn't just trade with Australia, it relies on it. Australia provides the raw stuff China needs to power its economy. Without Australian iron ore, steel production would slow down. Without Australian coal and gas, cities might face power shortages. Without Australian lithium, the EV industry would stall. So while South Korea sells China high-tech goods, Australia sends the building blocks. This makes Australia different. It's not just a trading partner, it's a supplier of essentials. That's why even with political tensions, trade between the two stays strong. China can't afford to cut off a country that fuels its growth. To further illustrate the importance of Australia, it is important to understand that Australia is home to some of the largest iron ore reserves in the world, particularly in the Pilbara region of Western Australia. Giant mining companies such as BHP, Rio Tinto, and Fortescue Metals Group operate vast open-pit mines in the Pilbara, each spanning many kilometers with colossal trucks and excavators working around the clock. It is no wonder just why China relies so heavily on Australian iron ore. But if we actually take a look at how dependent China is on Australia in this matter, we get to see a completely different picture. Here on the graph is China's iron ore imports by country for 2023. Now, what's staggering about this is the fact that Australia contributes a massive $71.8 billion for Chinese iron ore imports. That is no small figure. It is over 64% of China's total imports for iron ore. Likewise, if we take a look at other key materials, they all tell the same story. Australian natural resources are indeed helping fuel China's industrial boom and its economy. But there's quite an unfortunate story that is in play here, and it's in the fact that while Australia helps fuel China's industrial boom, China's consistent buying of Australian goods helps fuel their own domestic economy. Indeed, China isn't just a partner for Australian goods, they are very dependent on the Chinese market. How can we say this? Well, if we graph out Australia's exports by country, we get to see just how much they are exporting to China. Here on the graph, you can see that they exported over $102 billion to China in 2024, which is thrice the amount exported to the second largest country, which was Japan. In that year, China contributed over 37% of Australian exports. Imagine if China suddenly stopped buying. Australia's economy would take a massive hit. That's how deep the trade link runs. Over a third of everything Australia sells to the world goes to just one country, China. And that's what has occurred in some sectors of the Australian economy. For instance, Australia is well known as one of the world's largest coal exporters. Its coal mines, located in states like Queensland and New South Wales, produce high-quality coal. including bituminous thermal coal prized for high energy content, and coking coal, which is among the best for steelmaking. Major companies in this sector include Glencore, BHP, which also had coal operations, Anglo American, and Yancoal, which interestingly is a subsidiary of a Chinese firm that acquired some Australian mines, showing China even invested in Australian coal assets. For much of the 2010s, China was a top customer of Australian coal, especially for metallurgical coal. Here's a graph on China's coal imports by origin in 2019. Here you can see that Australia exported over $8.4 billion to China for that year. That was 47.6% of China's coal imports. But a year later, the Australia-China coal trade took a sharp turn in late 2020. Amid diplomatic tensions, after Australia's government pushed for a COVID origin inquiry, which angered Beijing, China imposed an unofficial ban on importing Australian coal. This was not announced via official channels, but Chinese power stations and steel mills were instructed to stop buying from Australia. Suddenly, dozens of ships loaded with Australian coal were stranded off Chinese ports, unable to offload. This was a shock to the trade. China had. Here in the 2021 year graph, you can see that Australia only contributed $685 million, which was a small share of just 2.84% of Australia's exports for that year. The impact on both sides was noticeable, but lucky it was manageable. Australia's coal industry lost a big market and some value. Coal prices also fluctuated, but they found alternative markets gradually. China suffered some power shortages in late 2021 for a variety of reasons, one being coal supply issues, though it's hard to attribute that directly to the Australian ban, as domestic policy and weather played a role too. Still, the Chinese industry felt the pinch of higher coking coal prices without Australian supply. To put simply, the two economies are deeply tied, but not equally balanced. Australia provides the materials that keep China's economy running, but it also relies heavily on China to keep its own economy afloat. It's a classic case of mutual dependence, but with a twist. China, being the larger economy, holds more leverage. When things are good, both sides benefit. China gets steady access to iron ore, coal, and lithium, while Australia earns billions in export revenue. But when things go south, like the coal ban in 2020, Australia feels the shock more. One political disagreement caused billions in losses and disrupted trade overnight. Now, beyond trade, there's more reason as to how Australia helps fuel China's economy, and that can be seen through the private sector. Over the past few years, we have seen the rise of Chinese smartphones, electric vehicles, solar companies, and battery giants. These companies trace their reliance on some Australian natural resources, but at the same time, they have come to dominate a significant share of the Australian economy. For instance, if we graph out the EV model sales in Australia, we get to see several Chinese electric vehicle companies on the list. Here, you can see that BYD and MG took up a big share from the total EV sales in 2024 in Australia. There is also Volvo and Polestar, companies that some of you may think are European, but are actually majority or partly owned by Chinese conglomerates. Likewise, Chinese brands are all over Australia, and their influence is only growing stronger, not just in electric vehicles, but across various sectors. In conclusion, Australia's economy is indeed dependent on China, and so is China being dependent on Australia. The only difference is that China is the bigger player in this relationship. It has more options, more industries, and more leverage when things go wrong. Australia, on the other hand, is more exposed. If China stops buying, Australia struggles to find buyers of the same scale and speed. But despite the imbalance, the relationship has helped the two economies prosper. But anyway, do let us know what you think. Thanks for watching.